transactions with JFE Notary Chain and turn innovation into your competitive edge. Get started with the standard plan at $1,999, limited time $1,599, and unlock full curriculum access, a digital certificate, our community forum, and 3 months of instructor support. Build foundational expertise that gets you career entry-level ready faster and with confidence. Go further with premium at $2,999, limited time $2,399, including all standard features plus 6 months extended support, 2x one-on-one mentoring sessions, access to advanced workshops, and an alumni network invite. Enjoy accelerated learning, personalized guidance, and enhanced networking to stand out in the market. Scale with our corporate solutions featuring a tailored curriculum, dedicated corporate training, bulk enrollment discounts, and white label options. Equip teams with scalable training and give your organization a decisive strategic advantage. Enroll now and join a future-focused community mastering JFE Notary Chain from day one. Introducing the Notary Chain UTXO Settlement Protocol, your gateway to secure compliant and transparent blockchain-based settlements. Harnessing the power of the ERC 3643 protocol and UTXO-based proof of funds, we deliver trust and legal certainty in high-value transactions. Our advanced cryptographic verification, zero-knowledge proofs, and hardware security modules ensure unparalleled compliance with global regulations. Experience near-instant settlement finality, perfect for seamless cross-border transactions with reduced counterparty risks. Notary Chain integrates effortlessly with your existing financial frameworks using multi-signature verification and real-time threat detection. Discover the ALESC settlement framework and Goldback token for legally enforceable asset-backed digital transactions. Built to meet stringent regulatory standards, our protocol provides unmatched security and efficiency for institutional clients. Join the future of settlement with Notary Chain and redefine trust in both traditional and digital asset markets today.
I wanted spending money that didn't lose value the second I earned it. That's why I started using Goldbacks. They're real 24-karat gold you can spend just like cash, but with one huge difference. They don't get crushed by inflation. Thousands of stores accept them, so I can actually use them for everyday things. And while my dollars weaken sitting in my wallet, my Goldbacks hold their strength. Plus, when you pay with them, nothing gets trapped. It just feels like cash finally upgraded into something that protects you.
But if we continued at this pace, we'd blow away all the record notional, nominal sales that we've ever had.
So many local coin shops that I've been talking to recently said that they have seen a slowdown in demand for silver since the massive drop at the end of January. And even some shops have said that because of that slowdown and because of the increased amount of people selling, they've even had to be careful about how much silver they buy. But at the same time, I just spoke with a bullion dealer, an online bullion dealer, who said that demand is sky high and that they are on track to have the best year that they've ever had. So what is it? Are we seeing a slowdown in demand? Or is that demand shifting to online? Or is it something completely different? So today we're going to be joined by James Anderson from SD Bullion to find out what's really going on with silver right now. But before we do, if you like videos like this, don't forget to go down below and make sure you like and subscribe. How would you like to win a full monster box of silver? Well, this year, my channel sponsor SD Bullion is giving away 2 full monster boxes of the 5-ounce silver Canadian Grand Maples. Make sure you go to sdbullion.com/sweepstakes and get your entry today. Hey everybody, welcome back. Today, as you can see, we are joined by James Anderson from SD Bullion. James, welcome back. How you doing?
Good to see you, Silver Seeker. Thanks for having me back.
Glad to have you here. And we definitely have something I want to talk about with you today. The consensus around YouTube, especially on the stacking channels that talk to coin dealers, local coin shops, has been that it seems like the demand and the excitement around silver is going down. However, James, we just talked before this interview, and you had said something is a little bit different with the online dealers. And if you don't mind, I would love if you would explain that to the viewers right now. What is going on with online dealers, with sales, so on and so forth?
Yeah, so just holistically talking about the industry in general. Like I've been in this industry for a long time, and sometimes you have, information that's happening in real time that you hear from either brick and mortar retail dealers or online dealers, and they can be conflicting in terms of where the currents are in terms of buy and sell and how much investors either are buying bullion or selling bullion. A couple things to keep in mind when it comes to the U.S. domestic United States, the bullion industry at large. A lot of people buy gold and silver for like a long-term trade. Generally, they're not doing it for a short-term trade unless they don't know what they're doing. But sometimes they will buy the stuff, and then when they want to go sell some or to make ends meet, say they have some bill that comes out of nowhere, either they'll sell it online to dealers or they'll sell it locally if they're in a city center that's big enough where they have enough brick and mortar dealers that will that can buy it for cash on the barrel. So the thing to remember here is that generally most people do live in city centers in the United States, and generally they do have coin shops around. So a lot of times when you're hearing information from local brick and mortar dealers, you're hearing most of the flow is when people go to sell, they sell privately to local dealers in small quantities. That's generally how it's done. They get cash for their their coins, and they go and use that cash to pay off whatever they're doing. That's generally how it works, unless they go and do it in large quantities, right? And so it's just keep in mind the fact that the flows of the highway generally, when people are buying, they're generally buying in large size from the online dealers. They will buy, from local brick and mortars. Don't get me wrong on that. There's a lot of people who just want to keep it totally private. They don't want to have anything in terms of records of transactions. But I'm just explaining to you the fact that the notional sales volumes, generally on the buy side, investors who are buying bullion to hold, is generally dominated by the online high volume dealers, and then the local sales volumes are generally the ones that dominate the market. And that's why you see this inundation with 90% silver. They couldn't handle it, the local brick and mortar dealers, because how deep of pockets do you have to have when all that bullion comes flying at you, as opposed to coming flying back to the online dealers. So it's just something to remember. And in terms of like thus far this year, there's a lot of people who think that there's not much demand, but that's not true. There is a lot of demand on a nominal basis. Our numbers are, if we continued at this pace, which is hard to presume because January was such a large sales month. But if we continued at this pace, we blow away all the record nominal sales that we've ever had in any prior year in our business. Our business has been around since 2012, so it's 14 years of growth steadily. But what you see is generally it's a smooth line, right? It doesn't go up and down like that. It kind of skews upward like this. And what's happening now is you're getting average order sizes are gone up tremendously. They generally in the industry, they're like $3,000. For a long time, they're about $3,000, $2,500 per parcel on the average. But that in nominal terms is more or less doubled this year. And that basically shows you that the confidence of the buyer, the people who are buying, because the price action is confirming it, the confidence of the buyer to come in and step in and put bigger volumes down in terms of buying their gold and silver has increased. And so the combination of it, I know we get all these mixed signals, but what I'm telling you is the market is pretty healthy, and we continue to get price action on the positive side. You're going to continue to see a good bid for precious metals.
Yeah, that's good to hear, especially when you hear some of the opposite side, like you had just said, from a lot of the local dealers. And I've heard that myself, and I've had dealers on the channel that have kind of said the same thing. Some dealers have straight up told me that they're at a point where the only silver that they buy is if they sell silver. So if, they have a day where they sell 500 ounces, then they'll put 500 ounces on the books as viable silver. But beyond that, they cut it off again.
It's totally understandable. If you have a lot of inventory coming at you and you're getting shot at, you have to have a lot of cash to handle that. It's completely understandable.
Yeah, absolutely. Now, you had said you've had the best nominal year that you've had so far. If it continues on this path, it will be the best year. How does that convert to ounces? Because obviously in previous years, silver was much, much cheaper. So you could get a lot more ounces of silver for that money. So for example, you said the average, order, a couple of years ago was $2,500 to $3,000. Well,
that was the case for like a decade in our industry.
Okay. For like a decade then. But my point is, when silver's $20, $25, now you're talking 100 ounces. Well, now that average did you say 5,000 now is what you're saying?
Yes, 5,000 per parcel right now.
Well, the $5,000 is not even 50 ounces. It's not even close to 50 ounces at this point. So I guess the question is, where's that line? Are you still selling as many ounces of silver, or is it just way less ounces of silver, but more money flowing in?
Yeah, it's the latter. It's less ounces, more currency flowing in after those ounces. That's generally how it is. So the parcels aren't as heavy. Let's say that.
So, James, what do you think that it means to see more people, just as a market as a whole, as the silver industry and the precious metals industry as a whole, what do you think it means to see more people putting more money into it? Even if they're getting less ounces, more money is now going in the precious metals.
So I always use the word currency because it helps differentiate in people's minds what we're talking about. Currency is the stuff that we use to spend to get the bullion, which is actually the money that stores value over millennia. So we've got a lot of currency chasing bullion, and it only gets you so many ounces of bullion, and this bullion goes up in value. It gets you less bullion for that currency. And so it's this kind of tug of war where you see people getting rewarded in terms of price action. And then also you see a lot of fear of missing out, people who are coming in and they need to get a position and they come in aggressively. And a lot of times the aggressive buyers can skew those average parcel orders. So people who've been in this industry a long time, who have been buying bullion, like myself, like I'll go in and I'll cherry pick and find products that I really like because the premiums are low on some of these high premium items, especially in the secondary market. And I'll buy onesie twosies here and there, but I'm not going in because I have a large position already, acquired. But people who don't have any bullion, right? They need to come in and they need to get their position moving in order to get 10, 20%, say, of their liquid net worth in the bullion. And so a lot of those people are coming in with large orders, and they are skewing the average orders. So it's a mix of stackers who've been in this industry for a long time, and then new stackers coming in and learning the market and buying aggressively and bringing in pretty large notional amounts that they're putting in precious metals.
So those people that are bringing in that large amount of currency, is there a difference, let's say today or maybe over the last couple of months versus where there was previously as in regards to like gold versus silver? What are they primarily focusing on? Has that focus shifted?
So, in the beginning of the year, it seemed like it was, obviously silver did incredible things. So you had a lot of people, chasing silver. But at the same time, you have a lot of people who are older, who are more mature investors, who essentially are just looking for the first most important thing, which is to have their currency, turned into something that will store its value and won't be as volatile. So older people will generally skew towards more gold buying, whereas the younger crowd who has a little bit more time on their hands, they generally skew toward more silver buying. I mean, right now, as far as the currents flowing, I'd say 50-50 is probably the norm. But when silver starts really outperforming, it does skew towards silver being majority buy.
Okay. Those older folks that are putting, a lot of that currency in the gold and silver, have you seen an uptick in that generation putting money in with what has happened over the last couple of years?
Totally. You have people who are getting toward retirement age, or, they're in their midlife, someone my age, say 45, midlife, who are thinking about getting a bullion position. They'll come in and generally, they'll get gold and they'll also get silver. They'll probably get a mix of both. The bottom line is that gold is just going to be more steady. And you look at a chart, it's just less volatile. Silver's more volatile, but it has the upside potential of outperforming gold and outperforming a little bit better, but it's just going to be a little bit wild of a ride. So you just have to kind of consider both metals. And also platinum is something that people are starting to skew toward as well. They're starting to buy a lot of platinum, given historically how cheap it is versus gold.
Yeah, I've actually seen a lot of comments about platinum recently. So I definitely can confirm that, at least from, this side of the aisle.
There's two things, the ratios that are kind of important to remember. You have a large data set of the gold to platinum ratio that skews so bad. It skewed so far where gold was overvalued versus platinum. So a lot of people saw volume in platinum. And then right now the platinum to silver ratio is nearing its 1980 low. I mean, it's now at 24, 25 per day. I mean, theoretically could get back into the teens, but that's going to take another push by silver to, really ramp up to see that happen. But seeing people drift out of silver and into platinum when that happens, if you can find it, that's the hard part. On the local level, very difficult to find platinum bullion at your local LCS. Generally, the premiums are very high, but those are two trends that I've seen a lot. Is a lot of people coming to buy, platinum using either those other metals to thrift into it, or people, using the gold silver ratio. Right, when the gold silver ratio dipped down to 44, a lot of people started moving some silver into gold for that reason.
Okay. So, James, as far as the market itself is concerned, I know you've been following it for a long time. I follow you on X. I'm sure many of the people watching do as well. Where do you think, people's heads are right now with what silver has done after the drop from, I think it closed at 116 right at the end of January. However, it has stayed above $70 an ounce, and it seemed actually recently even pretty steady above 80. Do you think that we are sitting in a new norm for silver, or is there more volatility coming forth?
Well, there's definitely going to be volatility, but the new norm is I don't think we're going back below 50 again. I think above nominal 50 is kind of the new norm. You could paint a picture possibly where that occurs, but that would be a deflationary collapse of nightmare proportions. So for it to be hovering in its 80s right now, spot wise, I mean, the question on support is like, will it break 70 if it goes lower? And if it does, how far will it go? And then on the upside is, can we get over 100 again? Can we start climbing toward that 120 number? Really, the key, I think you should be watching gold. I think gold would be the leader here for the breakout to come. Gold's got to trade beyond 5,300. If you look at it, it's doing like a wedge pattern where it coils, and if it gets over 5,300 and it keeps coiling higher, like you're probably going to see a breakout and go above the all-time nominal high. But that's possible in the next few months for that to occur. So. It's kind of a coin toss right now whether or not silver is going to start moving up and then gold's going to start moving up, or we're going to have one more downdraft, a major one.
Okay. So the last question I really want to ask then, James, is this, and this is an opinion question. Let's say you knew everything that you know about gold and silver like you do right now, except for you're for the first time ever going to be purchasing precious metals, let's say $10,000 worth. Where would you put your money?
So first thing I'd do is I'd write down why I'm buying bullion. And I'd write down 500-word essay of why I'm doing it. What are the motivations for it? What is the actual reasoning for it? Then I'd read it back and figure out whether or not that's about, preserving my purchasing power or enhancing my purchasing power. And whichever way that skews is the way I would mix my portfolio. If it's about preserving your purchasing power, you probably need more gold. And if it's about enhancing, then it's probably more silver, more platinum. But you have to be, if you're on the enhancing side, you're going to have to be patient, and you're going to have to be willing to stomach the wild gyrations in the spot prices, because there is nothing more manic and depresso than the silver spot price. It basically either creates this emotion that's extreme euphoria or extreme depression. We've been sitting in what seems like a depression, which is completely nuts, for silver spot price to be at 70 or 80 after what it did to begin the year. The sentiment is almost like we're back at 29 or 30s. That's the sentiment that's happening right now, where oh gosh, it's going to stay here forever, or it's going back down, or it's never going back up above 120. That kind of sentiment is pervasive, and those people are very loud on the internet, and they talk like openly like that kind of stuff. So it hurts sentiment a lot. I think psychologically you just have to know what your motive is and understand what your timeline is. It's probably longer than 5-10 years if you're someone my age. And you just have to be willing to put an allocation of your net worth into it and understand why you did it, so you're not going to get shaken out.
Fair enough, and very good answer. I like that, to write it down and really think about what you want to do. That makes a lot of sense to me. All right, James, well, that's all the questions I had for you today, but I do want to open the floor up. If there's anything that I didn't touch on or you wanted to cover, feel free to let it out right now, my friend.
Yeah, one other thing, like the Silver Eagle market's starting to get nutty in terms of the premiums. I mean, it's if you're looking for sovereign silver coins, I'd look at silver maples probably is the better option right now. Their premiums aren't as ridiculous. And in the United States, that's probably product number 2. And when you go to a dealer, they're going to like those because they can move those so quickly. So if you're looking at sovereign silver coins, that's silver maples would probably be the place I would look.
All right, awesome. Well, guys, James, obviously, with SD Bullion, who is my channel sponsor. James, thank you guys so much for being here. I really appreciate it. We need to have you on more. Is that okay?
Sure. It's good to be back, Solar Seeker.
Awesome. All right, guys, thanks again. I appreciate it, and have a great rest of your day.
Welcome to the Money Metals Midweek Memo, news and commentary relating to sound money, the precious metals markets, and the economy. I'm your host, Mike Meharry. Thanks for tuning in. So we have kittens, and one of them in particular loves to go out on our pool deck and hunt. And he's actually caught a few lizards, so he has some hunting prowess. But his success suffers from, let's just say, a lack of focus. He'll see a lizard and he'll start stalking it, and then a bird will grab his attention. As he tracks the bird, a squirrel will start chattering, and that'll sidetrack him yet again. Oh, look, there's a lizard. On and on it goes. And, sometimes I have to be honest, I feel like my kitten when I'm watching news headlines, especially if I'm on like a platform like X where it's just this scrolling stream, right? The news is always fast and furious, and it seems faster and furiouser since the war with Iran has started. As prices whipsaw, it's hard not to get caught up in emotion. And that's why dead people generally make better investors. I know that sounds kind of funny, but actually it's true, at least to some degree. And I'm going to explain here in a moment. But before I do, I want to take a moment and thank you for listening to the show. As always, I do very much appreciate the fact that you spend a little bit of time with me every week. There's so much out there vying for your attention, the faster and furiouser news feed. And so I appreciate that you find value in spending a little bit of time listening to this. If you would be so kind, I would appreciate it if you would spread the love. Go to wherever you're listening to this podcast and write us a quick review, or at least give us some stars. The more stars, the better. And also, if you would share these episodes on your own social media feeds, it will help grow the show, and I would really, really appreciate it. But mostly, I just want to thank you for tuning in and say that I do appreciate you. You're the reason we do this show, so thank you. So when I was a kid, I remember my dad trying to teach me not to act rashly. I was like most teenage boys. I had a tendency to allow my emotions to drive my actions. And to illustrate his point, he used to say, don't just do something, stand there. And of course, when he said this, he was flipping the script on the saying, don't just stand there, do something, right? His point being that sometimes you need to pause. You need to not act. You need to think and, cipher on what's going on before you take action. And turns out this is pretty good investment strategy as well. And researchers by several companies, including Dalbar, Fidelity, and Vanguard, reveals that dead people tend to be better investors than living people. Now, not suggesting suicide here, but you can adopt the strategy that a dead person would employ, doing nothing, because that's obviously all a dead person can do, right? So based on the aforementioned research, the best investors aren't necessarily the smartest people. They're not the people who have degrees in finance. They're not even the most experienced. They're dead. Or perhaps they're still walking among the living, but they forgot they had an investment account, They've got an IRA somewhere and they just haven't paid any attention to it. So it's just kind of on autopilot. Well, how does this make sense? Well, one of the key points here is that dead people don't get caught up in their feels. And I mean, of course, human beings are emotional beings. We're emotional creatures. And emotions often drive our decision making. Go have a conversation with somebody on social media, and you'll see how quickly emotions can dictate and direct the conversation. Personally, I'm not prone to panic or rejoice over daily price movements. I tend to be pretty level-headed, but still, I'll confess, we had the big gold and silver sell-off at the end of January. I was a little uncomfortable watching the negative numbers get bigger and bigger, right? I'm not going to lie. Selling crossed my mind, especially silver. So I understand, I'm not criticizing anybody. It's just the way human beings are wired. Brad Klontz is a certified financial planner and financial psychologist, which is kind of a cool thing. It's like, how do you become a financial psychologist? I get being a psychologist, but how did he find that particular specialty? Pretty cool. I think he'd probably be an interesting person to talk to. But anyway, he says that human behavior is the biggest threat to our portfolios. Quote, it's them selling investments when they're in a panic state and conversely buying when they're all excited. We are our own worst enemy, and it's why dead investors outperform the living. And Klontz goes on and he says that humans are evolutionarily wired to run with the herd. And I've read this too. I mean, I'm no anthropologist, but it is very true. We are herd animals. We have those instincts. And Clont says our approach to investing is actually psychologically the absolute wrong way to invest, but we are wired to do it that way. And that's this emotional, kind of gut, throw it all in or pull it all out. Ritholtz Wealth Management CIO Barry Ritholtz agreed, saying that big market moves can trigger a fight or flight response in our brains. And, we all have this. I'm a fight response, definitely. You can kind of tell if somebody comes up behind you and startles you. If your initial reaction is to kind of run, duck, cover yourself, you tend more towards flight. And if you want to turn around and punch them in the face, that is more of a fight response. Definitely a fight response. But Ritholtz goes on and he says, we evolved to survive and adapt on the savannah, and our intuition wants us to make an immediate emotional response. That immediate response never has a good outcome in the financial markets. Now, if a lion is closing in on you, definitely makes sense to base your response on that emotion, because you're not going to have time to think it through. But financial markets are a different matter altogether. Now, I'm not saying that you should just ignore your portfolio completely, right? That would be foolish. So just throwing that out there. You do need to make adjustments to your portfolio from time to time. And there are definitely times to buy and times to sell. So you do have to be willing to take action. What I'm talking about here is avoiding those snap impulse decisions. And, if you watch the markets at all, you know that every bit of news seems to drive some kind of market movement up or down. But almost all of them are short-lived, right? So you don't want to react to every new post that pops up on X. Trying to time the markets based on what has become a 30-second news cycle is going to wreck your savings and your sanity along with it. And again, you don't want to ignore your portfolio completely. You don't need to ignore headlines completely. Sometimes they are important. Sometimes they will signal changes in the direction of the markets. But you'd always try to put headlines in a broader context. And this is why I'm constantly emphasizing the macro environment, like what's going on in the bigger picture. It is important to know what the CPI data for February, comes out being, or what the job numbers are. But you've got to put those into a broader context. If you're not looking at the bigger picture, those numbers can be deceiving and actually lead you in the wrong direction. So when you see a big price swing, ask yourself, did anything just happen signaling a change in the fundamentals? And if the answer is yes, well, you probably need to explore that more carefully, and it may be time to make a move. But if the answer is no, you probably want to stand pat, even if the rest of the market is selling off, right? So you don't have to be dead to be a good investor. You don't even need to be dead inside, but you do need to keep your emotions in check. Stay focused on the fundamentals and don't react to every single news headline or price move. And I feel that this is particularly important as this Iran war plays out, because there are so many headlines to parse through, and a lot of it, let's be honest, it's just propaganda. And I'm talking about from both sides. Yes, the United States also throws war propaganda out there. So you have to be wary. And again, probably not a good idea to make snap reactions. The other day, oil sold off steeply just because Donald Trump got up and implied that the war was almost over, except it isn't. Probably. I mean, who knows, right? But there are constantly things that are going on. The other day, oil was selling, and everybody's like, oh, the war might be over. And today, I'm reading that it looks like Iran is dropping mines in the Straits of Hormuz, which could be a long-term significant impediment to the flow of oil. So we don't know how that's going to play out. We have to watch it. But just because Trump says something doesn't mean it's time to adjust your portfolio. And it's hard, I grant you. In this environment, with this particular political leadership that is prone to, make wild swings in what it's doing from day to day, it's hard. But you kind of have to just sit back and try to take it all in and decipher it as best you can. So as I discussed last week, war itself doesn't tend to have much of a long-term impact on the trajectory of gold. Of course, that doesn't mean it has no impact. And I came across some interesting analysis from Metals Focus indicating that this war may actually have some longer lasting ramifications. I like Metals Focus. I like their work. They are an association, and basically they just support the market. So they do a lot of data analysis, and I think they tend to be pretty objective. I think sometimes their assumptions can be a little bit mainstreamy, but that's okay. But I do like Metals Focus. I kind of want to go through some of the things that they said in this report. Metals Focus notes that there tends to be an initial boost to the gold prices at the onset of a war. Quote, looking back in history, the boost that gold tends to enjoy because of geopolitical tensions or shocks rarely lasts. Indeed, this is largely the case for most markets, leaving aside, of course, assets' favorable supply and demand fundamentals. Even in cases when conflicts have been prolonged, investor fatigue has soon set in and appetite for safe haven assets has dissipated. So I think that's interesting. I mean, of course, war is going to have profound impact on assets, right? Defense contractors, oil, things like that. But it's not necessarily going to have long-lasting implications for the broader market. And the safe haven phase was particularly short after the U.S. and Israel launched their attack on Iran. If you remember, right after the attack, gold surged and it eclipsed $5,400 an ounce very, very briefly. But that safe haven spike quickly corrected along with everything else a couple of weeks, or I guess a week ago, leaving significant price volatility in its wake as everybody tries to sort through the propaganda and figure out exactly how the war might play out. So we saw that initial boost, and then it actually corrected back. So right now we're kind of hovering in that $5,000 to $5,200 an ounce range that we've seen since the big sell-off and correction back in January. Today we're kind of on the high side of that. I think it was 5,200, just over that when I started recording the podcast. But a lot of volatility, a lot of big swings up and down. Not unusual to see 50, 60, $100 swings in the gold price right now, just because there's so much uncertainty that people are trying to work their way through. So in the near term, metals-focused analysts expect frequent price rallies driven by war headlines. I think sell-offs as well. However, they don't expect the price to scale all-time highs due to the war itself. Quote, as the market consensus oscillates between this and the sort of complacency we have seen develop this week toward the war, corrections are also in the cards, resulting in a period of heightened volatility. So basically what I've been saying, a lot of volatility, a lot of up and down. The metals-focused analysts say gold could get a bigger boost if the situation spirals out of control. That's common sense. Or, quote, if one or more of the fat tail risks instead crystallize. I think they're talking about things like, the Strait of Hormuz being closed down for a long period of time, or, a significant military setback for the U.S. or something like that. Quote, either way, sooner or later, the impact of the war on the gold price will wane, whether this is due to de-escalation, war's over, or investor fatigue that tends to develop. Some of the conflict-related safe haven bid for gold will dissipate. And we've seen that historically, and I talked about that last week. That tends to be the way the gold price goes. So while wars don't typically have a longer-term impact on the gold market, Metals Focus argues that this time it could be different, identifying, quote, a sizable tail risk that due to the specifics of the conflict. Analysts specifically note the location of the war and the potential for Iran to significantly restrict global flow of oil, plunging the entire world into economic chaos. So that's what I'm alluding to when I keep mentioning, the Iranians' ability to hinder or even shut off the supply of oil moving through the strait. But even without the worst case scenario, metals focused analysts say that they have, quote, no doubt that the war is going to contribute to, quote, the wider positive sentiment toward gold and its investment case. And I can definitely see what they're driving at. here. And they base this conclusion on three key factors, and I'll cover those here in just a second. But I do want to reiterate the fact that, the gold price is going to continue to move as the war progresses, of course. And the war is going to have an impact. It's another factor that we have to look at as we consider the direction of the markets. But we should also be very aware, and this is kind of what we're driving at here, we have to be aware of the fact that there are other factors still in play that probably have a bigger impact on the gold price, right? A lot of the things that have been in play all along will continue to be in play. So war is an additional thing. It's not like we forget about everything else that's happened and focus only on the war. And it's interesting because if you go back and look at the history, and I talked about this in a previous show, you will see that as a war goes on, other factors start to influence the direction of the gold price, particularly monetary policy. Now, the trajectory of the war can definitely impact the trajectory of monetary policy. So it does fit together, but you have to look at the big picture. So what are these three key factors that Metal Focuses kind of hones in on? Well, the first one is that there are broader U.S. foreign policy implications, right? And we've seen this. It's not just the Iran invasion. U.S. foreign policy has grown increasingly interventionist under the Trump administration. And this raises geopolitical uncertainty just in general, right? And think about what's happened over the last, couple of months here. The U.S. government has effectively overthrown two regimes in the last 2 months. As Metal Focus notes, whether you agree with this aggressive foreign policy or not, quote, it comes with lasting implications regarding the country's foreign policy. Quote, it signals an appetite to induce regime or political change using hard power, if necessary, to meet its strategic objectives. And analysts also point out that the U.S. did not do much to coordinate the attack with its traditional European allies. I was thinking about this the other day before I even read this. I was thinking back to the first Gulf War back in 1990. So they actually started ramping that up in 89. And we had Operation Desert Shield. And I remember a big part of that was getting all of our coalition partners to be down with the operation, right? A lot of emphasis on that. We got to get our coalition partners. There ain't no coalition partners in this war other than Israel, right? There really was no coordination with Europe at all. So this is different. This is a change. Metals focused analysts said, quote, on balance, such shifts in the world's largest economy and leading military power amplify geopolitical uncertainty. So what they're saying here, basically the first point is that this war will tend to exacerbate some of the geopolitical uncertainty and some of the distrust we've seen from other nations toward the United States. And that has been one of the things that has driven gold. The second thing that they pinpoint is the potential for long-term instability in the Middle East itself, right? Regime change does not guarantee a better regime. In fact, Mojtaba Khamenei, I'm probably butchered that, but he has taken over the mantle of leadership in Iran, and he is the son of the former supreme leader. So we traded in one Ayatollah for another. And he's been described by some as his father on steroids. So we actually might have made the situation worse in terms of the regime. Now, it's not to say that he'll make it to the end of the war, right? We might regime change, but that's where we are. There's no guarantee that we're going to get to the end of this and things are going to be better in the Middle East. And let's be honest, if we look at history, if we look at Afghanistan, Iraq, Syria, Libya, Somalia, none of those places ended up being more stable after U.S. action. It's just not how it works. There's too many unforeseen consequences. I told a friend of mine the other day, and I've been thinking about this a lot. This kind of foreign policy, central planning fails for exactly the same reason as economic central planning fails. We just can't know enough. people don't have enough knowledge and they can't anticipate all of the ramifications of a given action. So central planning always fails, and it fails when you're trying to plan central policy as well. You have all of these other personalities and contingencies and things that can happen. So I think this is a really good point. Might not be better when it's all said and done. As metals-focused analysts point out, the new Iranian administration could become, quote, yet more radicalized and adversarial. Quote, the possibility of internal turmoil that spills over into neighboring countries can also not be ruled out as the various factions in what is an ethnically diverse country compete for power following a potential regime collapse. And of course, the United States is encouraging this. I saw that they were trying to arm Kurdish fighters in Iran. So that's kind of one of those ethnic groups that would be vying for power. So again, no guarantee that things are going to end up better. And of course, this kind of geopolitical chaos is always bullish for gold. The final thing that the metals-focused analysts pointed out was the fact that treasuries have failed as a safe haven, and they see this as kind of a dynamic shift that could move forward even after the war is over. Treasuries have historically served as one of the go-to safe havens in times of uncertainty. That's not true anymore. The yield on the 10-year treasury has nudged up since the Iran war commenced, so that indicates sagging demand for treasuries. And this is a trend that is ongoing. It was happening before the war, and there have been several other situations where we've had the safe haven demand and the risk off sentiment hit the markets, and treasuries really didn't respond. People don't want U.S. government debt right now. There's too much of it. There's very little faith that the United States is going to get its fiscal house in order. So, yeah, this is a fundamental shift, because with treasuries failing as a safe haven, that leaves gold as the last safe haven standing. And so that's why the metal focus folks are looking at this and saying, this could be something that extends on after the war. So those are the three things that the metals focus folks point out. On top of those things, I would add that the war will likely supercharge some of the factors that were already driving the gold and silver market higher. So, usually wars are just kind of a blip on the radar. They impact the price initially, and then things kind of settle out. The reason that I think that this could actually have a bigger boost on the gold market as we move into the future is because it is going to exacerbate situations that were already in place in driving the gold bull market. I think this has the potential to kind of give the gold bull some steroids, and silver as well. For instance, I've been talking a lot about the debt black hole, right? We have massive levels of debt in this economy. We've talked about the national debt and how it continues to grow and how spending is going up every single day. We have a significant level of household debt. I wrote an article this week that you'll find over on moneymetals.com/news highlighting how much household debt has expanded in the fourth quarter of last year, and it's at record levels. And on top of that, a lot of folks are starting to struggle to make payments. We're seeing an increase in delinquencies. And then there's corporate debt. I wrote another article that highlighted the fact that there are a lot of analysts that are starting to worry that this combination of corporate debt and instability in the corporate debt market, coupled with the potential for an AI bubble burst, could be a big problem for the stock market. Now, war is just going to make the debt black hole that much bigger, right? I mean, how much money is the federal government running through every day to fight Iran? I actually looked it up, and the Pentagon hasn't released any figures, so these are estimates, but the cost seems to be around $1 billion a day, right? $1 billion a day. War is always costly. And then, of course, rebuilding countries after a war is also costly. And who's going to pay for all of this? Well, we are, right? And to be accurate, we're going to pay for it after the government borrows it. This is going to have to boost borrowing because the U.S. government doesn't have this money. And more borrowing will ultimately lead to more money printing, right? They have to inflate the currency to support the borrowing and spending. So that means they're going to be stealing more of your purchasing power. So the war is just going to feed the debt black hole. right? And it's also likely to make some countries even more wary of the U.S. and its foreign policy. The Metals Focus analyst alludes to this. This could accelerate de-dollarization, which has been a big driver in the gold market. People are becoming more and more wary of holding dollars because they recognize the potential of that being used against them by the U.S. government should the U.S. government want to try to pressure them into something. And, you know, I hear a lot of people, I talk about this and they go, I don't care what those other people think. And I get that. But you know what? You got to care what other people think when you're depending on those other people for your economy. And I think we're all linked together. I think it'd be a lot better if we could all be linked together, trading peacefully as opposed to like shooting each other. But that's an aside. But you see my point here, right? War news is relevant, but you've got to keep your eyes on the other balls that are also up in the air. Don't get swept up in the emotion of price swings because Trump said something or CNN reports something, right? The war itself is probably not going to have a long-lasting impact on the markets, but other things will. Things that come out of the war, things in place before the war, and some will be exacerbated by the war. And not many of these things are bearish for gold, at least not in my view. I really can't find a lot of scenarios that make me think, well, this war is going to be over and then the gold market is going to go into a bear market. I just don't see that. I don't see any of those factors lining up. In fact, the price dips might be a buying opportunity. And, you know, you want to have gold, you want to have silver. We have some specials that you can check out. If you go to moneymetals.com, on the very top of the page, you'll see our specials, and you can click on that and see what's on sale. But I wanted to highlight something because it's actually one of my favorite gold bullion products, and that is the gold Krugerrand. South African minted coins. And the reason that they're my favorite is because they were my grandfather's favorite, and he invested in those way back in the 80s. Man, that looks like a smart investment going back, right? I think he paid like maybe $200-300 for those Krugerrands. And my grandmother actually wore one. It was a half-ounce Krugerrand, and she had it put in a like a little frame, I guess, that she could wear around her neck. It was really beautiful. Now, you think about that today. I'm not sure that I would want to wear a half ounce of gold coin around my neck. I see that thing getting ripped off. But anyway, so we do have Krugerrands on sale at Money Metals, very low spot prices. So you can check that out over at moneymetals.com. But gold bullion coins are a great way to have physical gold. You know, they're going to retain their value. Everybody recognizes the value of a Krugerrand or a Canadian maple leaf or a U.S. gold eagle. You can go anywhere in the world and people will recognize those as valuable. So check that out over at moneymetals.com. Before I close out the show, I do want to note that the war is having some impact on the gold market itself. I'm not talking about the price, but I'm talking about the logistics, even as I speak. With airspace closed and a lot of flights grounded, gold is stuck in Dubai. And they're actually selling gold at a discount within the borders of that country. So the United Arab Emirates ranks among the world's top gold refiners and bullion exporters, primarily serves the Asian market. And it's also a conduit for gold shipments from Switzerland and the United Kingdom, along with several African countries. In 2024, around 1,392 tons of gold flowed through the UAE. So if you look at kind of think of it this way, the UAE is basically a middleman in the global gold trade, a very important middleman. Mining companies will typically refine ore into what they call doré bars once it's pulled out of the ground. So these bars contain anywhere from 60 to 90% gold, but it's mingled with other metals. It's not completely refined. Once the doré bars are formed, and they do this because it's easier to ship, right? So they'll send these doré bars over to the refineries in the UAE where they're formed into bullion bars and jewelry grade gold that is then exported back to the Asian markets. The UAE grew into a significant refining hub due to its strategic location. So means it's not going somewhere else where it's wanted. One of India's largest gold dealers told Bloomberg, quote, several cargo shipments have been delayed or stranded, leading to short-term tightness in the availability of physical bullion in India. And of course, India ranks as the world's second largest gold market behind only China. Metals-focused analysts say that there is enough inventory in India to satisfy the demand for the time being. Indian dealers imported a large amount of gold in January, so the stocks were already high. And this is typically a period of muted demand in India, kind of in their business cycle there. But a metals analyst focused also told Bloomberg, quote, as of now, there's ample stock. But if this drags on for a few months, then there will be a problem. There are also reports of refiners in other countries struggling to secure doré. According to Bloomberg, India's largest refiner gets about 10% of its doré from Middle Eastern mines. The company's CEO said that supplies have been significantly disrupted, and he told Bloomberg that contracts for new supplies from other regions come with a 60 to 70% increase in logistics costs. So these shipping costs could ultimately find their way kind of into the price of gold. We saw how disruptions in the flow of metal can impact precious metals markets when the tariff worries sent tons of silver from London to New York last spring. You probably remember that when those tariffs were initially announced, everybody was like, oh, are they going to tariff, silver and gold? So we saw this massive move of silver out of London to New York, kind of trying to get ahead of the tariffs. And then when Indian demand for silver peaked in the fall, it set off a significant silver squeeze because there was already a misplacement of metal. And that squeeze is continuing to ripple through the markets to this day. Now, the gold supply isn't nearly as tight as silver. Keep in mind that silver demand has outstripped supply for 5 straight years. So we have a silver market that is in a significant structural deficit. So it's much more sensitive to supply shocks and this misplacement of metal. Nevertheless, even though the gold market is much bigger and it's not as susceptible to these kind of shocks, locking up tons of gold in the Middle East and the squeeze on refining capacity in other areas may well cause shortages in some markets, leading to local price spikes. And the longer the war drags on, the higher the possibility of more serious disruptions. So at best, we probably should expect elevated price volatility as the war lingers on. Meanwhile, your dollar is worth less than it was last year. And that trend is going to continue, war or no war. As a matter of fact, as I mentioned, I have a feeling that the war is going to ultimately increase money printing. It's going to put inflationary pressure into the economy, more inflationary pressure, right? And this is why I have gold and silver, right? To me, it's an inflation hedge. I'm trying to stave off the depreciation of my dollar. I want real money. I want money that holds value. I want my wealth to be preserved. And if you want to do this, you need to consider getting some gold and silver yourself. Call 800-800-1865. Talk to a Money Metals precious metals specialist today. Ask them questions. They'll help you figure out how silver and gold can fit into your investment strategy. They can help you figure out which products might be best for you. They can answer all of your questions. These folks are fantastic, but do it today, right? You want to start now. My biggest mistake when it comes to investing and saving for my retirement and preserving my wealth is I started way too late. You don't have to be like me if you're younger, but even if you're older, there's still time to catch up. The day to start is now. So call 800-800-1865, or if you don't want to talk on the phone, go to moneymetals.com. You can chat online with a precious metals specialist, or if you know what you want to, if you just want to buy, you can pick out what you want. You can go get those Krugerrands, and we'll ship them right to you. Or you can store your precious metals in our state-of-the-art bullion depository in beautiful Eagle, Idaho. But now is the time to act because, like I said, your dollar is going to be worth less tomorrow than it is right now. That's almost guaranteed. Don't know what the war is going to do. Don't know what the stock market's going to do, but I do know that the federal government is going to continue to devalue your money, and you want real money. So with that, that's a wrap for this episode of the Money Metals Midweek Memo. You can get more information about everything that I've talked about on the show today and a lot more over at moneymetals.com/news. And if you want to get the latest news and information relating to gold and silver right in your inbox, make sure you sign up and join the other million-plus people that are on our email list. Now, of course, you can subscribe to the Midweek Memo podcast on your favorite platform, and when you do, you'll also be able to tune into our Market Wrap podcast that runs every single Friday, where you're going to get a quick overview of the week in precious metals, some commentary, and then conversations between yours truly and interesting people from the world of gold, silver, economics, and investing. So again, thank you so much for listening to the show. I hope you have a fantastic rest of your week, and I'll be back again next Wednesday.
All right, let's jump right in and break down a really unique financial structure called the UPMA Diversity Trust. Now, this thing is designed to connect old school U.S. trust law with a brand new economy that's actually built on precious metals. We're going to see exactly how it works from the ground up. So here's our game plan. We're going to tackle this in 5 key parts. We'll start with its legal foundation, then look at the tech that makes it all tick, and finish up with its ultimate goal, which is a fully automated system for preserving wealth for the long haul. Okay, first things first, the legal bedrock. What exactly is the Diversity Trust at its core? How is this thing actually structured in the eyes of the law? Well, it's set up as what's called a revocable grantor trust. Now, in simple terms, think of this as a super flexible legal tool. It basically means the creator of the trust, that's the grantor, keeps full control. They can change it, they can amend it, or they can even dissolve it completely. And that flexibility is a really key feature for its whole strategy. So who's running the show? At the top, you have the trustee, Bidziel Bey, who has complete administrative control. Then there's a co-trustee, a law firm called Legal Tender Services, and they handle all the legal stuff in escrow. But here's a really interesting detail. As of late 2025, there are no beneficiaries listed. That gives the trustee an absolutely massive amount of flexibility to operate. Right, but this is not just some paper trust sitting in a dusty filing cabinet. No way. It's actually powered by a pretty sophisticated digital engine that brings the whole thing to life and, more importantly, enforces all of its rules. At its heart is something called the Digital Trust Architecture, or DTA. The easiest way to think about this is like the trust's operating system. It's designed to create what the source material calls foundational credibility. In other words, it's about building a private, sound money economy that you can trust, one that operates completely outside of conventional banking. And this engine, it runs on 3 key pillars that handle credibility, dispute resolution, and, this is the big one, verification. You've got AFINET, which uses legal affidavits to make everything official. Then there's RSI, which is an AI system for handling any disputes privately. And finally, Notary Chain puts it all on a blockchain, creating a permanent, unchangeable record of every single transaction. Now, what makes this system so transparent is that it doesn't just rely on some private internal ledger. It uses a type of cryptographic receipt, kind of similar to what powers Bitcoin, so that anyone can independently verify the assets and the transactions. This gives you undeniable third-party proof that the funds are really there. So now we get to the assets themselves, and believe me, this is where things get really fascinating. See, the trust is designed to hold precious metals, but it makes this razor-sharp legal and economic distinction between different types of precious metal notes. Not all gold is treated equally here. It really makes you ask the question, when you're holding one of these fractional precious metal notes, are you holding a simple piece of metal with a commodity value, or is it something else entirely? And the answer, at least within this system, depends completely on its legal structure. In this slide, it illustrates that core difference perfectly. On one hand, you have goldbacks. Legally, these are structured as negotiable instruments. Basically, they're spendable money. Their value is directly tied to the daily spot price of gold, plus a little premium. But on the other hand, you have silverbacks. Legally, these are classified as chattels. Think of them as art or collectibles. Their value has almost nothing to do with the silver inside. It's all based on rarity and artistic design. And this distinction is absolutely critical to avoid what the system calls the premium trap. This is the huge mistake of confusing the high price of a collectible with the low value of the actual commodity it contains. It's like paying $100 for a baseball card because it's rare, not because the cardboard itself is worth $100. That's the trap. And here's why that matters so much. A silverback's price can be up to, get this, 20,000% higher than the value of the actual silver in it. I mean, that's just a massive premium. Because of that, the framework considers it completely unsuitable for accumulating wealth. It's a collectible, not an investment in silver, period. So knowing the difference between a currency-like asset and a collectible, how does the trust actually build and preserve wealth in a compliant way? Well, it automates the entire process. The whole strategy is guided by this core philosophy of sound money. The trust is literally built to reject currencies that lose value over time, like the US dollar, and instead, it favors holding tangible assets like gold and silver that are designed to hold on to their purchasing power. And it does this using a really simple but powerful 4-step automated process. A smart contract is always monitoring the cash balance. As soon as that balance hits a certain level, it automatically triggers a conversion. It takes that excess fiat and turns it into a stable, asset-backed currency like Goldbacks. Then, the whole transaction gets verified on the blockchain, so there's a permanent, tamper-proof record. So, how do all these pieces, the legal structure, the tech, the asset strategy, how do they all come together? Well, it's all in service of one primary goal: making sure wealth can be passed down through generations without losing its value. And that goal is called precious metal-backed succession planning. It's a system designed from the ground up to transfer wealth not just as a number in a bank account that's worth less every single year, but as stable, tangible assets that actually preserve their purchasing power over time. So, when it's time for a beneficiary to actually receive their funds, they don't get a check in the mail. Instead, the trust directly allocates Goldbacks into their own digital wallet. What's really cool is these payments can even be automated, triggered by specific life events like graduating college or a medical need, and the whole thing is legally secured under commercial law. The bottom line is this: the value the original creator intended to pass on is the exact same purchasing power the beneficiary receives, whether it's 5 years from now or 50 years down the line. It's all about protecting that wealth from the slow, silent erosion of inflation. To UPMA Diversity Trust, it offers one really specific vision for the future, blending old school legal principles with some very new school tech. And it leaves us with a final thought. As our world and our money become more and more digital, how are we going to define, protect, and pass on tangible value in an increasingly virtual world?
So I don't know if you follow silver. What's happening with silver?
Skyrocketed gold, record-breaking numbers.
All of that, and silver's been suppressed.
Who are these guys and what are they saying about silver? You got to see this one. Stay tuned.
Hello, silver fans. This is T, and you're in the place to be for silver education, acquisition, and entertainment.
The guy on the left is Patrick Bet David, and he is a billionaire. And the one thing that strikes me is that just like any typical billionaire, the moment somebody wants to talk about silver, he switches to a conversation about gold. Have you ever noticed that? Terrence Howard, he has some really intelligent things to say about silver that you will want to hear, that if you're a silver stacker, you know all about. The cool thing about this is, though, both of these guys are very, very popular. Terrence Howard has been in some of the biggest blockbuster movies, and PBD, Patrick Bet David, has millions of followers on his YouTube channel, Valuetainment, and elsewhere. Wildly popular. Silver is hitting popular culture.
I don't know if you follow silver. What's happening with silver?
Skyrocketed gold, record-breaking numbers.
All of that, and silver's been suppressed, artificially suppressed for the last 50 years. JP Morgan just had to pay $920 million in fines for the suppression of the silver market because of the paper contracts. And now we have a different pricing for paper contracts of silver for futures here in comparison to actual silver in Shanghai. There's this there used to be an arbitrage. You buy silver here, for whatever amount, even if it's $71 here, and then you go over to China and you sell it, for the $88 that would have marked over there. And well, now that arbitrage, they're not playing with that anymore because there's no silver in the COMEX. And we use over 1.2 million ounces of silver in all of our electronics, and we use 20 grams of it in solar panels, 50 grams of it in every electric vehicle, in every computer component, and there's only 851 million ounces being produced a year And most of our silver is coming from byproducts from gold mines, from lead, from zinc, from copper mines. We only get about 20% of our silver from actual silver mines. And China is hoarding it. And out of nowhere, JP Morgan, who has been fighting against silver all this time, now they got 750 million ounces of silver. And it's necessary for all of our electronics. So silver has the potential now to go up to being worth thousands of dollars.
Time out. Hey, let's talk about this now. Silver worth thousands of dollars. That would be a really cool thing. I don't know. But then again, people said it never hit 100, and here we are floating around a little under 100, and it surpassed 100. Now it's back down. Maybe 100 will be kind of like the new, base level. But the coolest thing about this whole thing is hundreds of thousands. Actually, let me rephrase that. Millions of people will be hearing, thanks to being on PBD's show, Terrence Howard speak of the virtues of stacking silver. Awesome.
It will become more even with gold. I think it's like 1:30 to 1 now, or sometimes it's at 50 to 1. Now it's going to get up to about 13 to 1. So,
okay, he was a little off on his gold to silver ratio, but let's not hold that against him.
So, and typically when the precious metals go up, the stocks are going down. But for a minute, they had the stocks and the precious metals going up at the same time.
Well, I think gold was suppressed for a while because the typical triggers of printing money, all that money we printed during COVID didn't cause gold to move as much. So gold eventually caught up. I think it's needed to be at 5,000 for a while. I think the 5,000 was inevitable. Now the question is, how much higher can it go?
There he goes again. Terrence is talking about silver, and PBD immediately wants to switch over to a conversation about gold. But I'm telling you, I strongly feel, and if you're watching my silver stacking channel, I have a feeling you feel the same way. Silver will have its day. We'll find out. Keep watching.
The more the U.S. dollar weakens, because the U.S. bonds, China just sold $864 billion of its U.S. debt. Japan is selling its U.S. debt. Nobody's buying the bonds, so the yield rate is going to change. And and precious metals is the only thing you can trust now. So silver.
What's your position with Bitcoin? Where are you at with
Bitcoin is going to die. I don't mess with it.
You think Bitcoin is going to die? Oh. You touch nothing with crypto?
I don't touch it.
Tell me why.
Here's another funny thing that kind of struck me from this video. They switched over to the topic of Bitcoin. And then if you look on the title of the video, it is Bitcoin is going to die. And so that's the big headline. Everybody just wants to talk about Bitcoin, numbers on a screen, fake money. In my opinion, this is real money. And so feel free to let me know in the comments what you think about this conversation. I am just really encouraged about the idea of silver being talked about in mainstream media. And so it's not something that happens every day. I thought it was something that needed to be celebrated and talked about with you. So feel free to make a comment. And if you are into silver stacking, be sure to subscribe to my channel. Hit that subscribe, hit the thumbs up on this video. If you want more people to know about the virtues of stacking silver, because when you hit that thumbs up, YouTube does a better job of sharing the video. And I'll tell you what, I really look forward to hearing your comments. One more thing before we shut her down. Let's take a quick look at the 1-year silver chart together. And look how silver was under 40, under 40, under 40. And then finally in September of last year, crossed that $40 mark. And man, what a run up all the way up to, I think it was $117 or $118. And then boom, right back down. But now look, lately we're kind of hovering around 80-ish. And, will that be the next launch pad? Will it hover around there for quite a while? and then spring up again. I don't know. Let me know in the comments. I certainly appreciate you watching my video. Thanks a lot.
Courts as profit-driven entities? It sounds absurd, but today we're exploring how our judicial system might actually be a massive financial machine in disguise. Buckle up, because this could change everything you thought you knew about justice.
Wait, what? That's a pretty bold claim. Where's this coming from?
Well, it all centers around something called Goldback. It's an online educational platform that's been making waves by claiming to expose how governmental systems, particularly courts, operate as financial entities. At first, I was skeptical too, but the more we dug into it, the more intriguing it became.
I can see why that would raise some eyebrows. What exactly are they teaching?
So, Goldback offers courses, interactive learning modules, and even blockchain-verified certificates for those who complete their curriculum. They break it down into 4 main areas: court operations, banking allegations, legal frameworks, and individual rights. It's a pretty comprehensive approach.
That sounds intense. Are they just throwing around wild accusations, or is there some substance to it?
That's what's interesting. They claim to base all their content on evidence-based research. We're talking historical documents, case studies, legal analyses, the works. They're not just speculating, they're building a case.
Okay, I'm intrigued. What's the most surprising thing you learned while looking into this?
Oh, there's so much to unpack. But if I had to pick one thing, it would be the idea that courts function as revenue-generating institutions. We all know about fines and fees, but Goldback presents it as if the entire system is designed with a profit motive in mind.
Wow, that's a pretty radical perspective. Can you give an example?
Sure. Think about traffic court. How many times have we heard about cities relying on ticket revenue to balance their budgets? It's one of those things that, once you hear it, you start seeing evidence everywhere.
Yeah, I see what you mean. It's like those speed traps that seem more about generating income than actual safety.
Exactly. And it's not just traffic tickets. They talk about how the whole case management system, from filing fees to bail bonds, is structured in a way that generates income for the court system. It's pretty eye-opening when you start to look at it from that perspective.
That's unsettling. But how do they tie this into larger questions about monetary policy and banking regulations?
Well, this is where it gets really complex. They delve into theories about how legal documents might function as financial instruments and how personal identification could be connected to securities. It's heady stuff, and I'll admit, some of it sounds a bit far-fetched at first.
Yeah, I can imagine. It sounds like it could veer into conspiracy theory territory pretty quickly.
That's the thing. They seem to be aware of that risk. They put a lot of emphasis on providing verifiable documentation and encouraging critical thinking. They're not just presenting this information as fact. They're asking learners to examine the evidence for themselves.
That's actually pretty responsible. How are people engaging with this material?
That's another interesting aspect. They've created a whole community around this. They have discussion forums, virtual meetups, and even collaborative research projects where people can dig deeper into these concepts together.
So it's not just a one-way flow of information. They're creating a space for people to explore these ideas collectively?
Exactly. And it's all decentralized. There's no central authority dictating what's true or false. Instead, they use a governance model where community members vote on educational priorities and guidelines. It's a very different approach to learning about legal and financial systems.
That's fascinating. In a world where we're increasingly questioning traditional institutions, I can see why this kind of decentralized, community-driven education would be appealing.
Absolutely. And let's not forget about the blockchain aspect. The fact that they're issuing tamper-proof verifiable certificates for completing their courses adds another layer of credibility to the whole thing.
Oh, right, you mentioned that earlier. How exactly do those blockchain certificates work?
So, when you complete a course or assessment on CourtBank, you receive what's called a soul-bound token on the blockchain. It's basically a digital certificate that's permanently associated with your crypto wallet address. These certificates can't be transferred or altered, making them a permanent verifiable record of your achievement.
And I'm guessing these aren't just generic completed the course stamps?
Not at all. Each certificate contains metadata about what specific competencies you've demonstrated and what assessment criteria you've met. And because it's on the blockchain, anyone can verify the authenticity of your certificate without needing access to your personal information.
That's pretty impressive. But I have to ask, do you think there's a risk of this kind of platform reinforcing echo chambers or spreading misinformation?
That's a really important question. I think there's always that risk when you're dealing with alternative narratives about how our society functions. But from what I've seen, CourtBank seems to be making a genuine effort to base their content on verifiable evidence and to encourage critical thinking.
Still, I wonder how many people have the time or expertise to really dig into all the legal and financial documents they cite.
That's a fair point. It's complex material, and I'm sure not everyone who engages with it will have the background to fully evaluate all the claims. But I think the community aspect helps here. You have people with different areas of expertise who can contribute their knowledge and help others understand.
I suppose that makes sense. It's not that different from how we engage with any complex topic, relying on experts and community knowledge to help us make sense of things.
Exactly. And what's interesting about CourtBank is that they're trying to make this kind of deep systemic knowledge more accessible to everyday people. They're saying, you don't need a law degree to understand how these systems work.
Which is pretty empowering when you think about it. These are systems that affect all of our lives, but most of us don't really understand how they operate.
Absolutely. And I think that's really at the heart of what CourtBank is trying to do. They're not just presenting an alternative view of how our legal and financial systems work. They're trying to give people the tools to understand and engage with these systems more effectively.
That's a noble goal. But I have to ask, how does this understanding of courts as financial entities affect how we think about justice?
Oh, that's a big question. I think it fundamentally challenges our notion of courts as impartial arbiters of justice. If courts are operating with a profit motive, even indirectly, how does that impact their decisions?
Right, and it raises questions about access to justice, too. If navigating the legal system requires understanding all these financial mechanisms, what does that mean for people who don't have that knowledge?
Exactly. And it's not just about individual cases. If we accept this view of how courts operate, it has implications for how we think about the entire structure of our government and society.
It really does. And I think that's why this topic is so fascinating and potentially unsettling for some people. It's not just about understanding a few legal technicalities. It's about questioning the fundamental nature of our social contract.
Well said. And whether or not you buy into all of CourtBank's claims, I think they're asking some really important questions that we don't often consider in our day-to-day lives.
Definitely. And it's clear that this is a conversation that's going to continue evolving. As more people engage with these ideas and contribute their own research and perspectives, our understanding of these systems is bound to deepen and change.
That's true. And I think that's a good note to end on. This isn't a topic with easy answers or a clear conclusion. It's an ongoing exploration that challenges us to think critically about the systems we often take for granted.
Absolutely. And whether our listeners decide to dive deeper into CourtBank's curriculum or not, I hope this discussion has sparked some curiosity about how our legal and financial systems really work.
Me too. It's certainly given me a lot to think about, and I'm sure our listeners will have plenty to ponder as well. Thank you all for joining us for this deep dive into a truly fascinating and complex topic.
Yes, thank you, listeners. And remember, whether you're skeptical or intrigued by these ideas, the most important thing is to keep questioning keep learning, and keep engaging critically with the world around you.
Couldn't have said it better myself. Until next time, keep those minds open and those questions coming. Goodbye for now.
Goodbye, everyone.
I wanted spending money that didn't lose value the second I... That's why I started using Goldbacks. They're real 24-karat gold you can spend just like cash, but with one huge difference. They don't get crushed by inflation. Thousands of stores accept them, so I can actually use them for everyday things. And while my dollars weaken sitting in my wallet, my Goldbacks hold their strength. Plus, when you pay with them, nothing gets tracked. It just feels like cash finally upgraded into something that protects you.